This lesson is the first of 3 on calculating federal income tax. This one is using the 1040 Easy. There's a ton of vocabulary related to this one, so I want to make sure that you're aware of it. You've got your adjusted gross income, which is what's remaining after you've made your adjustments. Your adjustments to your income, which are the things that are allowed to be deducted. You have an earned income tax credit, which is credit that you receive if you exceed an amount of taxes withheld, or if you have a low or moderate income and there's requirements that you make. Estimated tax payments, those are the quarterly payments that are paid to the IRS when they, anytime that you owe at least $1,000, they pull that out each quarter. That's what the employer sends. Exemptions are things that the taxpayer is allowed per dependent, and that depending on the tax year, it determines how much your deductions are. Health savings account is something that's sponsored by your employer that you can put away. So you could, if you know you have a medical condition, something like that, you would have a health savings account and you'd put your money into that, and then as you have bills come up, they would pull it out of that account, but it's pre-tax. An individual retirement account, or an IRA, is something that is a retirement plan that you put into and you save it separate. It is pre-tax, so even if you have a retirement program, you can put more money into an IRA. Itemized deductions are the amount of deductions that are, they're the things that we just mentioned, your IRA, your health savings account, and other such things that you can take away from your income that are pre-tax. They're things that you don't have to pay taxes on. Then you have tax credit. They're the things that reduce how much taxes you have to pay. So credit for how many your children and your child or your dependent care. You could have a dependent that's not your child, somebody that lives with you. So if you have child care expenses, then that comes out as a tax credit. Taxable income is the amount of income subject to tax after all the adjustments, and your total income is all the money that you receive: wages, salary, tips, care for somebody else, any benefits you receive in the process of adoption, interest income, ordinary dividend income, things in here that are relevant to you. Alimony, that means if you get divorced and you get money from your spouse, you have to pay taxes on that. Any business income, capital gains, or what happened when you sell something and you make more money than a certain amount, they charge you for that. Pension is your retirement plan, your IRA distributions, which is how much you get from your IRA that you've paid in. And if you win a prize, like the lottery, you have to pay taxes on it. And unemployment, you have to pay taxes on, as well as any Social Security benefits you receive. So that's all taxable income, or all income that can be taxed. When you get a job, the first thing you need to do is provide your employer with proof of the right to work in the United States. One of those proofs is your Social Security card. On it, there's a number. That number is your tax identification number. So your tax will always have your Social Security number on it, and then it'll have your name, and then you should sign it once you have possession of it. Then the next form your employer is going to give you is a W-4. This is a record of all the things that are your withholding. So it'll have your name, first, middle, and last, your Social Security number, which you will transfer from the Social Security card you have, your address, whether you're married or single, and how many allowances you're claiming. And that there's a worksheet that goes with it that they give you with the W-4, so you can determine. Usually for a single individual, it's 0, and then you leave blank spaces where it's not needed, and then you turn that into your employer. They use this to determine how much withholdings they have for you from the federal government. And at the end of the year, when you finish working for them, I think the deadline is January 31st, they are required to have sent to you a W-2, which is your statement of wages and taxes. And on there, it's going to have your Social Security number, remember, because it's your tax ID number. It's going to have your employer's number, because as a business, they have their own tax ID number. Then it's going to have how much money you made, how much income tax they withheld from the for federal and state, It's going to have your Social Security withholdings and your Medicare withholdings, all those things that we figured out earlier, and some other information that's not relevant to what we're doing today. So that's your W-2. This is your statement of earnings you will receive from your employer after, at the end of the year. This form right here is a 1099 INT, which means it's for interest income. So this person has some kind of an account that they earn interest from. They earned this amount of income, then they are tax exempt on this amount of that. So this form is something you add taxable income, interest income is added to your total income, to your adjusted income, to become your adjusted gross income. We're going to work through that in a minute. Then here is the wonderful federal tax wage bracket that we've kind of practiced on earlier, but I want you to see what it really looks like when they do it. So it's in our book on page 246 of our textbook is where you're going to reference. But notice that each one of these, it has, this is my $1,000, so 1,000 to 1,625. And obviously this keeps going down, but it also has columns coming this way: single, married filing jointly, married filed separately, and head of household. Whereas before we had them on separate pages in Chapter 5, your married was on one side, your single was on one side. It's actually all in the same form, and you just have to make sure that you're following the right column. So, that being said, we're going to calculate Brian Phillips' income tax and the amount due or the refund due him. Brian is single and a student with only part-time wages of this amount, $12,550, and a small amount of interest income of $780. According to his W-2, he had $1,005 withheld for federal income tax. Okay, so with that being said, we're going to come over to our 1040 Easy. So your 1040 Easy is it's blank, and you fill in your first name, your last name, your Social Security number, where you live, street address, and city and state and zip. And then you just follow the directions as you go down the form. So the first thing it asks for is your wages. That was $12,550 for Brian. Then it asks if you have any taxable income. That's your 1099 INT. He had $780 that he was taxable for him. He didn't have any unemployment. Then on line 1 and 2, you add lines 1, 2, and 3, and this is your adjusted gross income. So adding these two together, that's his total amount of money that he had coming in. Then you go down to number 5. It says, if someone can claim you or your spouse if a joint return as a dependent, then you check the applicable box. He is not claimable by anybody else. He is a student. He is single. If no one can claim you, enter this amount if you're single. So he was single, so we're going to enter that amount. Then we're going to subtract line 5 from line 4, and that's going to give us $4,380. This is his taxable income. So this is what we're going to check on when we look at how much taxes he owes. Line 7 says, what was the amount of money that the employer withheld? Well, the employer sent this much money to the IRS already. He did not have an earned income credit. He didn't have any taxable combat pay. We add lines 7 and 8 to get our next value. So line number, there was nothing, let's see, add lines 7 and 8A. These are your total payments and credits. And then you're going to use the amount on line 6, this one, to find your taxes in the tax table, which remember was on page 246. So looking over here on page 246, so he had $4,380. $4,380 falls between these two numbers. He is single, which is this first column right here. So he's going to pay $438. So, healthcare, individual, full coverage, no. Add lines 10 and 11. It's going to give you 438. And then if line 9 is larger than line 12, it is, you're going to subtract, and that's going to be your refund. So, whoops. Finding his refund, I'm going to take the 1,000 and I'm going to subtract the 438, and he has $567 that he's going to get as a refund. So then he's going to come down here and he's going to fill all this stuff in. I fill that as taxes, but if he did it, he would sign write his signature, his date, his occupation, and then if he wants to have it sent to him electronically, he'd put in all of his banking information here. So that's how you do a 1040 easy. Basically, you just read the instructions. If you're not sure about them, please ask.